Hi everybody, this is Bob Iacchino from Path Trading Partners along with my co-founder Mike Arnold. It is August 20th and this is a Path Chat Weekend Futures Update. Let me start off with a quick review of last week. The Fed and the ECB are both sort of struggling with weak inflation figures. The ECB came out pretty troubling, down below 1% again on the year-over-year change. And we all know what's going on in the U.S. We've talked about this multiple times in Path Chats, but the U.S. is certainly trending down away from that 2%, at least in the last 6 months. We had Trump disbanding the business councils on the heels of most of the CEOs walking away. So I'm not sure if disbanding is even the right term, but he definitely shut them down as there was a sort of exodus based off of their opinions of his reaction to the Charlottesville violence that we saw. North Korea backed off their Guam threat, and UK started to lay out their positions on Brexit, some of the things the EU was public about agreeing with, other things they were silent on, other things they sort of questioned. So that's sort of the headline news. Now back to that inflation issue. The Fed and the ECB kind of sent out dovish signals. We saw the meeting minutes for the Fed, and the tone of the ECB minutes was kind of the same. There are now lowered expectations that Draghi will use the Jackson Hole speech, Jackson Hole, Wyoming, the Fed's annual symposium, which is at the end of this week, to kind of set the stage for a shift in policy. He's clearly not going to be doing that. So you've got kind of dovish comments coming out of the Feds and some of the Fed speakers. Stanley Kaplan from the Dallas Fed on Thursday talked about how he needs to see more evidence of inflation before he's comfortable voting for one more rate hike. Now, the second part of that is they all seem to still be on script in terms of reducing the balance sheet normalization. And we did see yields fall again in that 5 to 10 year range. If they stick with balance sheet normalization, that will probably raise yields once they start doing it. And that'll steepen the yield curve if they actually back off of rate tightening on the short end. So it's a little bit of a complicated thing right now, even though they're talking about the balance sheet normalization as if it's still going to happen in September. It's a little troubling in terms of what's going to happen with the yield curve if that's all they do. The yield curve could really steepen dramatically, slowing down the stock market quite a bit. North Korea announced this week that it's not going to target the area around Guam. China implemented United Nations sanctions, cutting off imports of North Korean coal, iron ore, and seafood, so that further isolated the country, and depriving it of hard currency that it often uses to kind of boost its nuclear program. The U.S. announced that they're investigating Chinese trade. China didn't respond too well to that. They actually sent out some kind of smoke signals about it's almost an act of war. And by that, they mean trade war, not actual war. So tensions are kind of really heating up. Meanwhile, NAFTA negotiations are set to begin this week again. Canada, Mexico, and the U.S. have their trade representatives meeting to try and tweak the existing treaty. Substantial changes are not really expected, but that's really what President Trump wants. So we'll see if he comments on that. In terms of the UK Brexit positions, so the UK has been criticized by the EU for months. And the British government published several position papers this week laying out detailed viewpoints on border issues between Northern Ireland and the Republic of Ireland, as well as the need for a transitional customs union following Brexit. Brexit negotiators are trying to meet the EU demand that sufficient progress be made on a series of issues, so Brexit tension is kind of heating up. The rights of EU citizens living in the UK and the financial settlement are being taken up promptly because those are two of the biggest issues. Japanese economy expanded at a 4% annualized rate in the second quarter. That's way above the expectation of 2.5%. Now, there is a little bit of a caveat in that news. We definitely have a 4% growth, but when you have very little economic growth for basically the last 20 years, and you get one blowout quarter, that 4% looks much more like it is. So it's off of a very low base. And to get a 4% growth on that, really, the numbers don't really make it such a dramatic shift. But it still is an annualized growth rate from quarter over quarter of 4%. And that's better than they've been doing. So it is a start. With 92% of the S&P 500 index reporting actual earnings for Q2, earnings are expected to increase 12% compared with Q2 of 2016. It's a 12% earnings growth if it stays right there. Revenues are seen growing 5.1% and 4.2% when excluding energy companies. You had a fall in rig counts and you had a quick pop in crude oil in toward the end of the week. Oil rigs fell by 5. So now you've got +2, -1, +2, -1, +4, -5 in the last bunch of weeks. That's not so good. So I mentioned that Jackson Hole Fed Symposium. Otherwise, it's a pretty light data week. It's really geopolitical. And then you take the resignation or the ouster, whatever you want to call it, of President Trump's chief strategist, Steve Bannon, and he's returning to Breitbart News. He says he's going to talk pretty openly about the most divided White House there has ever been. So he's coming for the Republicans, but from a conservative point of view, that could cause some friction. That kind of thing is not likely to affect the markets overall, but you will see some friction and you could see some pretty crazy tweets this week. It did calm the market's fears that Gary Cohn, however, the chief economic advisor of the president, he is the one who is viewed to be the tip of the spear of tax reform and tax cuts. So on Thursday, there was a rumor that he was going to resign. Markets didn't take it well at all. And then with him saying he's not resigning and Steve Bannon leaving, markets perceived it as that rivalry is now out of the way and Gary Cohn is still there. And his position is not only solidified, but it's stronger than it has been. Let's just do a quick look at the economic calendar. I'm only doing high importance data for the major economies, and tonight, Sunday, there are none. Monday, there are none. Tuesday, August 22nd at 4 a.m. Central Time, we've got the Eurozone ZEW survey of economic sentiment for August, and we've also got the German ZEW survey of economic sentiment for August. I don't have an estimate on the EU's, but the forecast for Germany's is 15 versus 17.5 last. Wednesday, August 23rd, ECB's Draghi is speaking in Lindau, Germany. That's at 2 a.m. So any speech from Draghi is of high importance. That's it in terms of high importance data. Shooting over to Thursday, August 24th, we've got UK gross domestic product year over year. It's expected to be 1.7 versus 1.7 last. We have the Mexican Central Bank monetary policy minutes. The UK GDP is coming out at 3:30 in the morning Central. Mexican Central Bank monetary policy minutes, 9 a.m. Central. And then at 6:30 p.m. Central, Tuesday, August 24th, Japan's National Consumer Price Index year over year for July, expected at 0.4 versus 0.4 last. Mexican Central Bank monetary policy minutes are very interesting. Their last meeting had an unchanged tone on everything to it. Then Friday, August 25th, U.S. durable goods orders, 7:30 a.m. Central, they're expected to be out at minus 5.8% versus 6.4% last. Then you've got the Jackson Hole Symposium, the main speeches. 9 a.m., Janet Yellen is speaking at a Fed conference in Jackson Hole, Wyoming. Again, that's the Fed Symposium. And then 2 p.m., after most of the markets have kind of died down, except for U.S. equities, you've got the ECB president, Mario Draghi, speaking. Now, he has said he's not going to use the Jackson Hole speech as an opportunity to announce or even discuss in detail monetary policy. You never know, though. There are Q&As at these kinds of things each year. That is about it. So let me hand it over to Mike to let you know what he's seeing on the futures charts. Mike, it's all yours.
Thank you very much, Bob. VIX still at an elevated level, closing the week 1426. Dropped from this spike in the 17, but still remaining elevated. So that's what we're going to see if it drops back down and releases the fear from the markets, or if it stays in an elevated condition. Switching over to the financial futures. Here's what we'll be focused on for the next week. We have the Dow mini futures. Close below this trend line, full target of that's going to be right around, down around this 21,500 level. In the way of that, 21,590 is where the flat 50-day exponential moving average. That's going to be some support, major support around this 21,500 that we'll be watching for. That's also the bottom of the Gann rotation zone, which is between the 50 and the 62.5% retracements. That's a very critical level for GAN retracements. Do rally up, major resistance prior breakdown zone, and where the 21 is, right around this 21,820, and then kissing the trend line goodbye right around this 21,861. That's going to be key resistance. If we do get through that, then next major area we'll be watching is the 22,000 to 22,025 levels. Switching over to the S&P. S&P, zoom in on this, down below the 50-day exponential, closing below here, which was also closed below a trend line. The initial target on that was reached, this 2004-23 area, where this flat area. The next target down is going to be around this 2,410 area. And then the bottom of the GAN rotation zone, 2398 to 2402, is a very critical area. Should we sell off? You can see when it got below the trend line, it came back up to kiss the trend line goodbye and to retest prior support becoming resistance before the big sell-off. There's now multiple overhead resistance. First levels are 2433. Next key area we'll be watching first right around this 2450 between the first cross rotation zone. And then if we rally back up, very major resistance right around this 2,467 to about 70 area is going to be major resistance. Over to the NASDAQ futures. NASDAQ futures. Not below this very key trend line we're watching, broke down earlier, rallied back into the congestion channel, then broke down, now south of the 50-day exponential moving area and at this critical support level around this 57, 70, 71 area. We're going to be watching to see if it gets below this trend line on a closing basis. If we get a close below this trend line, which is probably going to happen at about 57.62, it's an upward sloping trend line, so that number might creep up a bit, but that's going to be a key area. We're then into a clear path with the targets could be down to about the 56, 57 area, and then possibly down to the 5600 area. The critical GAN area for the NASDAQ is right around this 5724 area, so that's going to be critical to see if it can hold that. If it does rally back up, there's going to be resistance between this 58.57 and then all the way up to about this 58.85 is very key resistance. If we get back through that, we should see a retest of the top of this horizontal channel right about this 59.42 area. Those are key areas to watch for in the NASDAQ. Switching over to crude. Crude now on this rally up from these recent lows. Let me zoom in a bit more here. Major swing low, swing high, higher swing low, higher swing high, higher swing low, higher swing high, came up, couldn't exceed the last swing high. This swing low is still higher than this one. So we're going to see what happens when it rallies back up and see if it exceeds this area or can't. The first areas of resistance are around this 48.95 to 49. If we get through that, we'll be watching for the significant level about 49.60, and then we'll be watching for a retest of this 50.25 area to about 50.50 area and see if we then go up and make a new high. If we break below this trend line and about the 46.40 area, we'll be watching for retests of the most recent swing low right around this 45.40 area to 45.60 area. And then if we get below that, we'll be watching for a possible return to the 44.25 area. Switching over to gold. Gold came up. We had a trend line trade earlier. It got to the end of that clear path, which was right around this 1296 area. We spiked above, hit a couple GAN levels and dropped back down. This high is going to be very key. The 1300 level is very, very key. So that's the level we'll be watching. If we do get through the 1300 level, we'll be watching for a return to 1307 recent highs, then the possible 1310. A lot of people will trade this if it comes back down as a double top. It doesn't not fit in our areas of a double top. What we'll be watching for if we get back below the rising rotation zone, which right now is coming in at the top half of 1286, Be watching for a return down to 1277 and then possible key support about 1273. On a move below 1273, we'll be watching for a return to 1265. Finally, over to silver. Silver also, zoom in on silver here. Sell off, big rally back up, take it back into this congestion, very key congestion area. Also significant level at the 1690. When it spiked above the most recent highs, 1724, it could not get to the next GAN level. We're just going to update that. So if we do return that 1732, next key areas you can watch for about 1747 and then 1762. On a sell-off, very, very key support, significant level, 1689. Then we'll be watching a retest of the bottom of the rotation zone and the 50% GAN level on this last up move, which takes us to about 1670. If we get below there, we're going to be watching for the bottom of the major GAN rotation zone coming in about 1655. That's all we have for you on this Path Futures Weekend Update. Turning it back over to you, Bob.
Thank you for that, Mike. Thank you guys for watching. We got a new Money Path podcast out. Check that out at pathtradingpartners.com or type in the Money Path podcast in iTunes or Google Play. And thanks for watching. Don't forget to hit like and subscribe and check out some of our other videos, especially if you're into cryptocurrencies. We got a ton of cryptocurrencies on our YouTube channel. Cheers, guys. Thanks for watching.